he wants to have your opinion on a track record of making 5% per month on average for 2 years.
What would that? How would that be?
Yeah,
Is that
is
a good
that
thing?
yeah?
Yeah. Again, you really have to focus on your Sharpe ratios and what a smart what a smart investor will look at is they'll look at and they'll say, okay, if I gave you $100,000 right now, in the past, would there be any time that your consecutive losses would have lost a lot of that money, right? So that's what that's a little secret that you should really pay attention to. Think of yourself as saying, imagine you have $100,000 and you're giving it to Etienne to trade. Now, he shows you a track record, but during that 1 year period, there was a 3-week period where he lost, let's say, 25 trades in a row that exponentially went higher. Well, if I give you my $100,000 again today, and that 3-week period happens again, that $100,000 might drop down to $60,000. Then it's going to take me so much longer to get my money back. So it isn't necessarily the net 5% a month that matters. What matters when you're building your track record is to be able to say to an investor, look, at any point in time that you give me your $100,000 based upon my strategies, based upon what I'm doing, you will never be in any great danger from any big drawdown immediately. You might go through a 2, 3, 4, 5, 6% drawdown, but you're never going to go through a 10% drawdown or a 20% drawdown, not on one trade. This is a really important thing. Over a losing streak. That's what investors want to see. An intelligent investor will want to see, if I give you my $100,000 and he has a bad period, what's the worst case that's going to happen right now? So I think too many people, they're focused on 5% a month on average, but there's nobody that does that in the real world unless you're like Stevie Cohen or or one of the greats that have been able to do that. But even they have periods of extended losses, right? So that's what you want to focus on when you're building a track record. Listen, if I walk up to you and I say, look at Etienne, in the last 3 years, you give me $100,000, and based on what I'm showing you right here, your money's never really going to be at risk for more than a 3-month period, 4-month period, and even in a worst case, you might go through a 5%, 6% drawdown. You're going to feel a lot better about taking a net 50% a year return versus me saying to you, look, Etienne, I'm going to make you 100% a year, but if you give me $100,000 right now, you might drop down to $50,000 before the year is over and go over it. So really important. That's key. Don't just focus on the averages. Focus on smoothing out the drawdowns.
Yeah, really, really important. And I think you have to remember that people are always risk averse. They don't like risk.
Right.
So, Timur's second question is, do you have any tips on how to manage risk? Because this is a topic that we talk about a lot. So any tips on how they can manage risk better?
Yeah, absolutely. It's very simple. It's math. It really is just math. It's really just math. It's one of the major components in my education. It's really the holy grail of trading. You can all give it away for free right now, but you can Google, use the Kelly criterion. Okay, if you follow the Kelly criterion, you will almost never, ever, ever go broke, and you'll have the most smoothest equity curve, and you'll be able to raise millions of dollars if you follow it on every trade. I spend a lot of time on getting my students to use it correctly and use it effectively. But the true holy grail of trading, and for those of you that came to this live webinar, Don't let anybody else tell you anything else. If you want to be a successful trader, follow the Kelly criterion, and I guarantee you, you will never blow an account again, and you will have the smoothest equity curve that you could imagine that can raise a ton of money. So I teach that specifically, how to use that effectively. I have some techniques and how to do that. But if you just want to Google Kelly criterion, build a spreadsheet on that. It will help you tremendously from where you are now.